What's going on, everybody? My name's Jose from deepdatainvesting.com, and today we'll be covering horizontal analysis. Quick plug, if you haven't already, go ahead and sign up, where we send out different things that we've learned about investing so that you don't have to waste any time digging through hundreds and thousands of different resources on the internet. We just want to help as many people as possible with their investing journey. So what is horizontal analysis? Well, horizontal analysis is simply just a comparison of a company's financial statements from different accounting periods. This helps you spot any different changes that are happening in the company's growth or performance. It helps you identify trends that are happening in the company. Horizontal analysis can even help you forecast different things like revenue or expenses. You could even use horizontal analysis to predict a company's bankruptcy by looking at a company's balance sheet, looking at their cash, and seeing what their burn rate is and predicting its downfall. There are different insights that you can gain from simply performing horizontal analysis. Horizontal analysis can even uncover different questions that you might not have thought about. Let's say a company is bringing consistent revenue over the years, except this year the net income is significantly lower, and you wonder what's going on. By performing horizontal analysis, you may uncover things like the cost of goods are going up really high, or some shady things like you find that the general and administrative costs are going significantly up for no reason. There are two different figures that you look at in horizontal analysis: the difference in dollar amount and the difference in percentage change. Let's take a look at the formula that we're going to be using to perform this horizontal analysis. It's really simple. We'll jump into the computer and actually go through a real example of Microsoft's income statements, since we've been covering Microsoft in previous videos. All right, so let's jump in. Boom, and just like that, we're back. So I'm actually at the SEC Edgar database checking out Microsoft's income statement, and we can see it here. But what I'm gonna do is I'm gonna copy all these values out and go to Google Sheets just so that we can play around with the different formulas and perform horizontal analysis. So here we are on Google Sheets. I did the dirty work and I copied all the numbers out. So right off the bat, we can see that Microsoft's income statement looks super clean. I mean, the numbers are growing, really noticeable. You can see it just by looking at that net income. But to get more insight, let's perform some horizontal analysis. But before we get there, let's take a look at what the formulas that we're going to be using. So to get the percentage change, there's a simple formula that we can use. We can use the comparison year minus the amount in base year divided by the base year. That'll give you the difference between the base year and the comparison year. We can multiply that by 100 just so you can get the actual percentage. To get the change in dollar amount, you simply just subtract the comparison year minus the base year. All right, so we have the income statement for 2020, 2019, and 2018. But for simplicity, let's just compare 2020 and 2019. All right, to get the difference in dollar amount, let's go ahead and use this formula. So go ahead and press equals. We'll grab the first row, which is product, and we'll subtract the current year minus the previous year, 2019. Let's go ahead and click enter, and we get the difference in dollar amount, which is $1,972,000,000 from 2019 to 2020. So that's really good, and that's just in products. But if we go down to the corner and we go ahead and drag that, that'll copy the other values into its respective columns. We do that, we get all the differences. I'm clearing out all the empty rows because we're not using those. All right, so let's name this column difference in dollar. All right, now the next column, we want to focus on the percentage change. So let's do that, percentage change. To do that, let's just remember the previous formula that we used, which was comparison year minus base year divided by the base year, which is 2019. Then we can multiply that by 100 just to get the percentage. There we are. So the difference between 2019 and 2020 in product revenue was 2.98%. Now let's drag this corner and get all the values. I'm gonna clear these out. All right, so there we go. We have all the values that are needed to perform this horizontal analysis. So to start off, let's start off with the revenue. So in revenue, we have product. Product actually increased by 2.98% from 2019 to 2020. We go down to services and other, and that's an outstanding number of 25.429%. In total revenue, we have a percentage change of 13.64%. That's marvelous. So if we keep going down to the cost of revenue, we see that in product, we actually decreased the values in product by 1.5%, which is really good. In service, we have an increase of 12.85%. This number still makes sense because there was a 25% change in service and other revenue. So it makes sense that the cost of service went up a little, which is still good. It's 12%. 1% only. Down below, we have the total cost of revenue. Now this was an increase of 7.38%. Still fantastic. As you see, the total revenue that was brought in, there was a change of 13.64%, and the total cost of revenue was only an increase of 7.38%. If we go down and we take a look at the gross margin, there was a 16.88% change. That is a $14 billion change between 2019 and 2020. If we look at the other expenses such as research and development, there's an increase of 14.17%. This makes sense. I mean, Microsoft is trying to make their services better so that they can acquire more clients or customers. In a different perspective, you can see that it's an increase of $2 billion or $2.3 billion. If you look at different periods, this is a steady increase, and it's a good sign because I mean, we brought in a total revenue of 13.64%. Next, in sales and marketing, we see a change of 7.6%. That is a $1.3 billion cost between 2019 and 2020. Then for general and administrative costs of 4.62%, and that is $226 million. So far, to me, these numbers look fantastic. I mean,
I think it looks fantastic.
No problem with Microsoft. This is actually a really good income statement from what we can see here. We go down below to the operating income and we see a beautiful number of 23.27%. It's beautiful. That's a difference of $10 billion. And we go down here to other income and we see a negative difference of 89%. I wonder what that was. This was probably a sell-off of some kind of investment that they had or something like that, but I don't think that this leaves any dent in Microsoft's finances. Then we go to income before income taxes, and that's 21% change. That's a whopping $9.3 billion. We go down to provisions for income taxes and we see a pretty big difference, and this is double the amount of taxes that Microsoft had to pay from 2019 to 2020, and you can see it's about a $4 billion difference in taxes that they had to pay. But you know what? No problem. Because if we go down to the net income, we see an increase of 12.84%. That is a whopping $5 billion of net income that Microsoft brought in from 2019 to 2020. So that's fantastic. And we take a look at the earnings per share, and that is also increased by 13.83%. So that's more money to the investors. Now, this is a fantastic income statement, but we can use a horizontal analysis on crappier companies and see why they're so crappy. But this is just one use case, and I just wanted to show off the concept of how to use horizontal analysis. As you can see, we actually extracted some pretty cool insights about Microsoft's income statements between the previous year and this year, such as the double amount of taxes that Microsoft had to pay between 2019 and 2020, and a decrease of cost of product of 1.5%. Now, just for fun, let's take a look at the difference between 2018 and 2019 and see if there's any kind of consistent net income that is coming in. Now, let's use the same formula. Now, that's the difference between the comparison year and the base year divided by the base year, and then we can multiply that number by 100 just to get the percentage. All right, we start seeing some consistencies here, so let's drag this number down, or this formula down, just so we can get the values for the rest of the rows. Let's delete these unnecessary rows here. Okay, so we see some consistency actually. So we see 2.4, like a 2% change, 2.5% change, 30% change between services, a 14% change in revenue. So we're really seeing some consistency here so far. All right, so here's an increase in product, but there's an increase in service of cost and revenue. And we keep going down the line. Things are still looking really good. Let's take a look at the bottom line. The bottom line says that there's a difference in percentage of 136% between 2018 and 2019. That's crazy. I mean, this is definitely a good sign for Microsoft. That's it for this one. Thank you guys so much for watching. Please leave a like, subscribe, and go to deepdatainvesting.com and sign up there. All right. If you guys learned anything, please leave it down in the comments down below. It'd be so cool to read your comments. Check us out on Instagram, Facebook, and Twitter. That's it. We'll see you guys on the next one.